Bitcoin is less than 2. In fact, I checked this morning, it's like 1.6. But at 2, it's 0.2% of all the financial assets in the world. It could go up 10x, i.e. we could go from 80,000 a coin to 800,000 a coin, and it would still only be 2% of all the assets in the world. I mean, really? I mean, it's
so early.
Yeah, we're really very. I mean, and the big scale of things. If this is the best form of money that mankind has ever created, and I believe it is. I know that sounds hyperbolic, but it's not. It's a technology that cannot. It's a form of money that cannot be diluted. We've never had that before. Let me emphasize: we've never had that before. It's new, right? A technological innovation. If that's the case, if it's the best form of money that's ever been created, why shouldn't it become the most valuable form of money ever created? I think it will.
One important aspect that Lawrence Lepard emphasizes is that Bitcoin is a long-term investment that rewards patience rather than being just another speculative asset. In contrast to the conventional stock market, which is characterized by continuous trading and analysis, Bitcoin provides an alternative strategy: purchase, hold, and let time do its magic. Lepard notes that Bitcoin has continuously beaten conventional investments like equities and bonds over the years, and this tendency is predicted to continue as use grows, albeit more slowly. Lepard said that avoiding the impulse to trade regularly is the true difficulty. Bitcoin's value increases for individuals who take a more measured approach, even while the stock market promotes active trading. Simply purchasing and holding for 5, 10, or even 15 years will probably yield enormous profits for investors. Take a moment to like this video, subscribe to the channel, and turn on notifications for more content on Bitcoin and the digital asset space. Also, drop your thoughts in the comments below. It helps with the YouTube algorithm and supports the channel. Thanks, and enjoy the video.
Wait 10 years, and people are going to look at you and like, holy shit, you bought it $80,000? That stuff's worth $800,000 a coin. You own a full coin? Oh my God, that's stunning. I mean, that's going to be the progression, in my opinion. So the other thing I would say that I like to emphasize, again, in the book, is the chart by Jesse Myers. It just shows how early we are, right? There are $900 trillion of financial assets in the world: stocks, bonds, real estate, cash, all that stuff. Bitcoin is less than 2. In fact, I checked this morning, it's like 1.6. But at 2, it's 0.2% of all the financial assets in the world. It could go up 10x, i.e. we could go from 80,000 a coin to 800,000 a coin, and it would still only be 2% of all the assets in the world. I mean, really? I mean, it's
so early.
Yeah, we're really very. I mean, and the big scale of things. If this is the best form of money that mankind has ever created, and I believe it is. I know that sounds hyperbolic, but it's not. It's a technology that cannot. It's a form of money that cannot be diluted. We've never had that before. Let me emphasize: we've never had that before. It's new, right? A technological innovation. If that's the case, if it's the best form of money that's ever been created, why shouldn't it become the most valuable form of money ever created? I think it will. So, that's how I see it.
The thing we all say is 1 Bitcoin equals 1 Bitcoin.
Right.
There's only going to be 21 million that ever exists. Right. So get your slice of the pie.
That's exactly right. I mean, the beautiful thing about this investment, Alan, is that you can just kind of buy it and forget about it and go live your life. And you just know that I also have price performance charts in the book that just show you how much it's gone up over time. And, I don't know what that average number is going to be in the future. It's going to come down somewhat, as we get to the top of the adoption curve. But gosh, I mean, to have an asset that's going to grow in value 20, 30, 40% a year, compounded for a bunch of years. I mean, in the old days, investing in stocks and bonds, everything else I used to invest in, I would have killed to have an asset that looked like that. I've never seen anything like it. So it's just, I mean, it just, the hard part is to not do anything. I mean, you got all these people who are wired up on trading, and I want to buy it and I want to sell it, get it the right way. No. You don't need to do any of that stuff. You can just buy it, lock it away, and wake up in 5 years, you're going to be richer. 10 years, you're going to be even richer still. 15 years, you're going to be super rich. And so, it's kind of one of those. And that's hard because it kind of goes against, the stockbroker mentality, which is, you got to trade, you got to move, you got to, dodge and weave and be brilliant. And this is like, no, this is actually the case where the tortoise is going to beat the hare, because it's just going to keep marching along year after year, getting more valuable. So it's very clear to me that this is a real movement. I mean, the ETFs is a big thing. Larry Fink is a big thing. I mean, And you've got these world-class investors. You've got Paul Tudor Jones, who's one of the best investors of the last 30 years, saying, that it's the fastest horse in the monetary debasement race. You got Ray Dalio, a brilliant, hedge fund manager, one of the best in the country, who's was a big gold guy, and has finally come around to, gee, this is digital gold, and I really like it. So it's, people are waking up to it. And, what is it? Sailor says you want to buy something that, can't be stopped, everyone needs, and nobody understands. and it's the nobody understands that gives you the opportunity. Because once everybody understands it, it's going to be more fairly priced. And there will come a time, by the way, when the returns per year will go down, because we're much further. The reason it's doing so well right now is we got double curves going on. So gold's going up now too because of the sovereign debt crisis, right? But Bitcoin's gone much faster than gold because gold's been around 5,000 years. Everybody knows about gold, wants gold. They've already bought gold. They get it. But Bitcoin is digital gold, and therefore, you've got it goes up when the government prints money, and the government's, will print money. We know that. The book will convince you of that. And then it also goes up, because you've got this adoption curve going on. Because right now, 5% of the citizens get it and own it, and 95% don't even know they need it yet.
One of the main reasons people are turning to Bitcoin is inflation. As fiat currencies lose value, individuals seek assets that can protect their wealth. Lawrence Lepard believes that rising inflation will eventually force the public to demand a better monetary system. While this transition may be painful in the short term, it could be the catalyst needed for real reform. The ideal scenario would involve a proactive shift to sound money, but this requires both political will and public support. Lepard, along with other advocates like Luke Gromen and Judy Shelton, has been working to push this movement forward. He has even sent his book to policymakers, including Donald Trump and J.D. Vance, to raise awareness about the urgency of monetary reform. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
I tend to think the problem's going to get resolved in the next 5 to 10 years, because that's kind of the length of fourth turnings, and we are in a fourth turning. And for those who haven't read that book, I highly recommend that book as well. And the issue here is, what is money? And because the credit system we've got has just gotten out of control, and it's painfully obvious to many, many people that it's a problem. And so we need to do a monetary reset. The monetary reset will work and will be much better if we reset to sound money. I think that is coming. But I think, frankly, we need to have a bigger political movement for it. And that's why I wrote the book. And then I also think, frankly, we're going to have to suffer from more inflation, to the point where a large part of the population says, okay, enough is enough. This is horrible. We cannot continue this way. Fix it, government. And so people will emerge, as, the circumstances always drive, there's a problem, there'll be a hero. People will emerge within the government that'll say, okay, we got to solve this. We got to get to a monetary standard where the money is sound. And hopefully that'll be, choosing Bitcoin. Sadly, I think there's some possibility that, based on the old system and history and everything, they might choose gold first, which would be a mistake. But at least it'd be a step in the right direction, and then you could transition from gold to Bitcoin. But in either case, being on any kind of a sound money standard would be substantially better than being on a fiat standard like we are today. And I think in the worst case, in a hoped for case, we have very high inflation. We get a big political movement for sound money. We do a one-time reset, similar to what Roosevelt did in the 30s, where we say, okay, we're going on this standard, and this is what we're going to use as our money, and we can't print it anymore, and government deficits have to be balanced, and all that debt is going to be written down in terms of the new money. And if you did that, and we didn't have a war, if you think about it, basically all the technology, all the people, all the energy, all the skills, everything we got would still be here. Now, some people would be richer and some people would be poorer. Bondholders would be significantly poorer. People who already own that sound money, like gold and silver and Bitcoin, they'd be richer. But, and there would be a period of suffering as a result of inflation. But my view is that if we have a big one-time inflation and we reset so that we don't have any inflation on a go-forward basis, that's a much more intelligent way than just kind of bleeding out through inflation year after year after year after year, which is kind of what we're doing right now. So I think there's a way to do that sort of a reset. The book calls for it. I call for it. I mean, I've sent the book to everybody in government, including Trump, Vance, Bissent. you name it. And, there are a lot of us, there are a lot of sound money advocates out there who have their hands raised, who'd be willing to help. Luke Groman, Judy Shelton, myself, the list is long of sound money people who know how to do this. And, we can return to that system and things will get better quickly and they'll be good on the other side of it. And so that's where I hope we're going. In fact, I know we'll get there. What's very hard to tell though, Ellen, is the path. Because there's just so many variables and hopefully we don't have to suffer through just a complete outright collapse of fiat currency. That somewhere as we're heading toward that, the people who are in positions of power say to themselves, all right, this is a problem. We can solve it. We need to solve it. We will solve it before we have total hyperinflation. But, I think some people say hyperinflation is extreme and impossible. And I disagree. It's not, it's a tail event, but it's not a zero probability tail. If you look at other countries that have behaved the way this country is behaving now, those policies have led to hyperinflations in the past. Now, we need to go into Doge a little bit because Doge is actually an effort to slow down this train, and they're doing it, but they really have a very tough task in front of them. And my view is, the train is barreling down the tracks, and maybe they can slow it down, but they can't stop it. And that's just the math. If you look at the interest expense, if you look at the growth in debt, if you look at, Elon says he can take $2 trillion out of the deficit. There's no way. Unless they decide they're going to cut Social Security, Medicare, defense, and interest costs by 50%, because that's what it'll take. And, we can all handicap the odds of that occurring, but my handicapping of it suggests that those odds are not high. And so the fiat train continues to roll along out of control. The correct solution is a monetary reset. And, what I think we need to hope for and what the book advocates is to spread the word, to support politicians who understand that and believe in that and will do that. And that's hopefully where we get to. Hopefully we do it in as fair a way as possible without a ton of pain. But, to be frank and to be brutally honest, you can't guarantee that. Other fourth turnings, there's been significant pain. The best, look backwards on fourth turnings, you look at World War II, a lot of pain. 50 million people died. Civil War, a lot of pain. Big percentage of the population died. American Revolution, a lot of pain. So, there could be some pain, sadly. But, I hope the pain is minimal, and that we just adjust and go back to sound money.
Lawrence Lepard believes that the financial system is approaching a breaking point and that a resolution will likely occur within the next 5 to 10 years. He references the concept of a fourth turning, a period of societal upheaval that forces major structural change. The core issue, according to Lepard, is that the current credit system has spiraled out of control, making a monetary reset inevitable. Although he admits that politicians may try a gold-backed system first, Lepard contends that switching to a sound money standard, ideally Bitcoin, is the wisest course of action. Any move away from fiat currency would help stabilize the economy. Therefore, he thinks this would still be a positive step. He cautions, though, that significant change won't occur until inflation is out of control and the public demands a solution. He compares the current gradual bleed of inflation to past monetary resets, such Roosevelt's efforts in the 1930s, and argues that a one-time restructuring in which the government pledges to sound money and writes down debt would be significantly better. He thinks that preventing complete hyperinflation should be a top goal, even if this shift will probably cause considerable economic suffering. Lepard also attacks government initiatives to calm down the escalating debt issue, claiming that absent significant cuts to entitlement programs and improbable political move, current fiscal policies render a solution practically unattainable. Finally, before the system completely implodes, he urges broad public understanding and support for leaders who see the importance of healthy money policy. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.